Hi guys, welcome back to my channel. Kelvin here. So today we have a very special guest. His name is Chris. He has a YouTube channel called Chris Honey Money.
Yes, correct.
So right now he has almost 6k subscribers and he'll be reaching 10k very soon.
I hope so.
You always comment on my videos. The reason I asked him out today is to learn from him how to invest lah. When did you started investing and why did you start to invest?
Okay, I actually started in year 2014. And 2014, I was actually still an undergrad in university. And why I started investing is because I started reading on financial blogs. And a lot of them actually talk about financial freedom, passive income, and all that stuff. So I thought that maybe that's something that I really want to align on, something that can really allow me not to work in my retirement years and have that passive income cash flow. So that's how all it started, right? The thought of financial freedom being a very powerful tool for you to actually live the life that you want. And that is why I started investing passive income. That is the strategy at that point in time. Yeah, so that was my investing strategy, trying to start with dividend stocks to increase my cash flow so that it can cover the basic expenses.
You say that you were an undergraduate. So at the time you had income already.
I do have like side hustles. So one of them I talk about is my tuition income, which I already talk about it in my video where I talk about why I quit my most profitable job, right? So I started tuition at around 10 years ago when I started university or before that, just to earn a bit of side income and to really have some kind of cash flow so that I don't have to depend on others or my parents' allowance, right? Because we don't really want to burden them and we also want to have that extra cash flow for our own spending.
From what I know, tuition can earn a lot of money if you do it full time.
Yes.
But mind sharing why did you stop doing tuition?
Yes. So tuition is actually very lucrative. For starters and beginners, you can earn around $20 per hour. For those who can do group tuition setting, right, you can earn potentially up to over $100 an hour. And the reason why I quit tuition is because I got tired of it. Very simply because not only you have to be very on the ball with the parents and the students, right? The syllabus is also something that is changing every year. So the method that you are teaching this year may not apply in the next 2 years already because MOE is always changing a syllabus. I also reflected on my tuition experience. Why am I teaching these students? And then some of them will come up and ask me, why am I learning like Pythagoras theorem, algebra, quantum physics and all that stuff, right? I don't really have a good answer for them because I myself don't apply all this knowledge after university in my work life and even my normal life. So I felt that the reason for me to teach tuition is kind of diminishing. I don't think I'm training the future leaders on where they should go, and maybe the future is always in disruptive innovation and technology and all that stuff that's going to change the world. And that is why I now read more on those financial literacy YouTube channels and also channels that discuss all these future trends like Kelvin Learns Investing.
Just a side question. Will you start coaching in the future?
Coaching.
Wealth Guru.
Wealth Guru.
Adam Khoo.
Okay. So I never intended to do all these Wealth Guru courses because firstly, I don't think I'm good or qualified enough at this point in time. But in the future, I may want to start a consulting business, but not a Wealth Guru course, right? Consulting is more of like to advise people, to get them on the right path, to avoid any mistakes. So then that is where the value of a consultant lies in. But I think Wealth Guru, where you teach the masses, right? That is something that I'm not familiar with and I don't have a plan for it yet.
What kind of mistake did you make when you first started investing?
I think one of the beginner mistakes is not knowing what you want, right? Because when I started investing, I thought I wanted passive income. I wanted consistent cash flows to cover my basic expenses. And to me, if you tell people this idea, especially to young people in their 20s, right? You want passive income, you want consistent dividends, they will laugh at you, you know? You know why? Because now crypto is like going to the moon like 20% per month, and then you are telling them you're comfortable with 5% dividends. I think that is just something that is not applicable in the current year anymore. And the mistake is because I see whatever shiny things, shiny objects that are relevant during that point in time, I will jump into it. Day trading make good money, I jump into it. Passive income dividends make good money, I jump into it. High yield bonds, I also jump into it. So Practically anything that can earn money, I will try to dip my toes into it. So I don't really have a planned strategy when I was younger. And that is actually quite a fatal mistake, because if you don't know what you're doing or what you're aiming for, then I think it is very dangerous when in crisis, all these things hits together, you will actually question your own decision. What are you doing? Is it right or wrong? And should you stick to that strategy or not?
So you invested around 2014. Were you affected by the... There were two crashes in between, right?
Yes,
So were you affected by them?
Okay, so if you remember in 2015, we had a China stock market kind of crash, right? Because of the China economy and regulatory stuff. That was actually my first mini crash. I see my equities actually falling to around 30 to 40% per counter, right? And it's actually quite a humbling experience for me, because it was just 1 year after I started investing, and then I start seeing this massive drawdown.
Did you panic so?
Yes, I did panic. I panicked so much, because I was also in my first year of job and my income was just barely making it, right, as a fresh grad. So that is something emotional aspect that you need to take care of, especially when there are external factors that are affecting your equities. So that's why it's very important to have the emotional mindset before you actually touch on all this investing stuff.
As you mentioned, your goal for investing is to achieve financial independence. What is the number for you?
Okay, so for me, right now this number is around $1 million in portfolio USD, because that will generate around 40,000 USD of safe withdrawal rate that I can withdraw every month. So if you follow the financial independence retire early strategy, right, 4% withdrawal rate, I believe it's mentioned in Kelvin's video. So that allows you, like, between inflation and growth, you can withdraw 4% safely, and the 4% you can use it for your daily expenses, your household bills and all that stuff. So to me, that is a comfortable level for me right now.
How long more do you need to achieve this goal?
From the current state to the 1 million portfolio, I will believe it's around 5 years, so around 35 years old.
Wow, that's young. Right after that, if you so-called retire early, what do you plan to do?
Okay, so my ideal FIRE plan is actually to do a barista FIRE. That means you take on a less strenuous job that you actually love to do, instead of actually doing like a corporate job which you hate to do. So my barista is actually doing YouTube. And I think doing YouTube, coming back to this, is because I think it's very nice to actually share knowledge to people who are interested in what you're sharing. And that's where I actually watched Kelvin Learn's investing videos 1 year ago, right? So 1 year ago, he was the same like me, right? He just had a few thousand subscribers. Not many people watching him, but he slowly built his own reputation and his subscriber base over the year. And he gained so much popularity, especially in year 2021. So he's really someone that I really look up to, and I consider him as my senpai, and I really want to do this kind of YouTuber FIRE, like what he is doing right now in the future.
Actually, personally, I also don't know if I can continue doing this or not. Yeah, I'm feeling a bit of burnout recently.
Why are you feeling the burnout, or what led to the burnout?
So right now I'm doing YouTube full-time, so because I lost my job, and since then I've been working like 13 hours a day, 5 days a week, which actually is much relaxing compared to previously. But even so, 13 hours a week, I don't think anyone can continue doing this for 5-6 years.
Yes.
They will die, I think. So yeah, maybe I will take it slow 2-3 years from now. But for now, I maybe still quite young, so I will chong a bit to build up the passive income first.
Sure.
Yeah, so if you do it, all the best. The one thing I noticed about your YouTube channel is that you don't share your portfolio that often. How many stocks do you have in your portfolio right now?
So I have around 7 of the core stocks in my portfolio, and then for my satellite, I have around 7 stocks as well.
Wow.
So I actually adopt a core and satellite strategy, right? So for those who don't understand what's a core and satellite strategy, core is basically those stocks that you buy and never sell, because you have so much conviction into them, and then you'll just add in when the dip comes. And satellite is more of you're exploring these stocks, you don't know whether they will make it in the future, and because your conviction is lower on them, they may not be as big now, but they have the growth potential to become multi-baggers in the future.
But what's the percentage between the two?
Okay, I would say a good split between 6 and 4. So 6 for my core stocks and 4 for my satellite.
So for your higher conviction stocks. What are the top 3 stocks that you have?
These top 3 stocks may not be in particular order and they may not be my top holdings. But in terms of my top conviction stocks, there are actually 3. So TAM, Tesla, Apple, and Microsoft.
Nancy Pelosi also like these stocks.
Yeah. Okay. And maybe I give some reasons why I believe TAM are the future, right? So I always adopt this strategy called connecting the dots. This is a very famous strategy actually pushed by Chicken Genius Singapore. He talked about if you can manage to connect all the dots in this world, right, then you actually have like multiple returns because of how much effect they bring throughout the world. So let's talk about Tesla first, right? If you know what Tesla does, it's not only an EV company. It has a lot of integration between the other companies like SpaceX, like Starlink. All these things we cannot see it right now, but in future when Elon Musk have all this actually prep up, right, you'll know that Tesla's technology can all be applied in the other companies that Elon Musk have, and even SpaceX technology will be applied to his other companies as well. The one I'm most interested in is actually Starlink, and Starlink is because it's this wide internet coverage that has 0 dead spots in this world. Imagine you're on an airplane and you have 0 dead spots. You have full internet connectivity. How awesome is that, right? And then for Apple, I'm sure you all know of the Apple ecosystem, right? It's not only an iPhone maker, it also has MacBook, it also has Apple Music, Apple Services, Apple Podcasts, AirPods, and all that stuff. So I believe all this thing is really integrated into your life, whether you like it or not. You will definitely own at least one Apple product in future, okay? Even if you don't use the iPhone. Microsoft is integrating the way we work in life, right? It's changing the way we work because it integrates all the enterprise softwares so seamlessly. Teams, Azure, Office, Windows, Xbox gaming, and all that stuff. You want to integrate together, nobody does it better than Microsoft in enterprise sense. Even Google don't come close at this point in time.
The reason you are interested in these 3 stocks is because you are quite sure that they will do well in the future. Why then do you diversify your portfolio to 14 stocks?
So like I mentioned, right, in my core portfolio, I have 6 holdings. So these 6 holdings, I believe, will do well in the future. But the thing is that these 6 companies, they are more like mature companies. So they don't have a lot of growth pathway ahead of them. So we are not talking that they will like multi-baggers in like next 5 years. They will probably grow around 20 to 30%, and that's quite a good return, right? But if you compare to multi-baggers who can grow like 2x, 3x or 10x in the next few years, then I believe there's actually quite a difference between the core and the satellite. So that's my other bet in the satellite stocks.
What about cryptos? Do you invest in cryptos?
Yes, I only invest in 3 cryptos. That is BTC, ETH, and SOL. So Bitcoin, Ethereum, and Solana. So the reason for Bitcoin is because it's the market leader and it's actually a store of value, right? We always talk about store of value. And Bitcoin is actually the first cryptocurrency that I invested in because of the halving concept. The rate that you mine the Bitcoin will actually be decreased. So Bitcoin is actually a limited supply in this world. And with lower supply, you'll know that the price will increase. So that is just a very simple concept behind Bitcoin. Ethereum and Solana is because of their usage, right? We can already see like real life examples of how Ethereum and Solana is used. Smart contracts, you cannot run away from Ethereum, okay? NFTs, you cannot run away from Ethereum and Solana. All these kind of NFTs, artwork, they are all transacted in Ethereum and Solana, and with the metaverse going on in the future, right, I see all these coins have a great potential coming up in the way we transact in the metaverse and of course in the NFT market. So this is all use cases that are really applicable in the world right now.
My portfolio and a lot of other people's portfolio consists of mainly Tesla stocks. What do you think about those kind of people who invest so heavily into one stock?
I only have 3 C's for them, right? Confident, conviction, command respect. Okay, I have nothing but respect for these people because they must be really confident and have high conviction in such a stock like Tesla to actually put like more than 80% of their portfolio into it. I myself am not comfortable in putting 80%, so I really respect these people because if you note of the Tesla trend, right, it actually rolled up to 1.2k and then it will drop back down to $900 in the recent weeks, right? So we can see Tesla is really very volatile stock, and if you really have a large holding in Tesla, most likely your portfolio will fluctuate very violently, especially in such a times when Elon Musk keep tweeting about his stuff and then questioning the price of Tesla and selling his stocks.
Yeah, maybe I'm not confident. Maybe I'm just apes together strong. If you have so many investment, right? But if you can only choose one, which one will you bet your money on?
My answer would be Google.
Hey, Google. Okay, Google.
So I'm sure you all know what Google does, I don't need to explain. But in the foreseeable future, I don't think Google is going to get replaced in terms of the usage of Google, whether it's its search engine, whether it's Google Cloud, or all the software that Google actually produces, right? And Google right now is because the moat is so strong that no competitor even bother to go and make a product that can rival to Google or even be the least 10% of it. I don't think anyone wants to go against Google at this point in time. For the other more mature companies, you can see that there may be some competitors. Like for Apple, right, they produce iPhone, and then we have other phone manufacturer company. Like for Tesla, even the EV, we also have other rival EV companies. Amazon, we also have Shopee that's going to rival it in future. So for Google, can anyone name a suitable competitor right now in this space and in the foreseeable future that is taking over them? I believe it's really hard. There may be.
How do you do your research? Like what source you look at? Is there any like forums that you look at?
Sure. So fundamentally, I only look at three sources. One is a YouTube channel called Meet Kelvin. The second one is Motley Fool. I actually have a subscription with them, and also Seeking Alpha, which is a free app, but you have to pay the articles. I actually focus more on my research with Meet Kelvin because I put my trust in him that I signed up for his course actually. Yeah, so why Meet Kelvin is because he actually provides a very unbiased view that traditional media does not provide. Right, traditional media, you know, is really biased to the advertisers and people who pay them money. But Meet Kelvin will actually go undercover. He will really go through the details and present it in such a short video format that he produces like 3 to 5 videos every day for you to actually go and watch. So it saves me a lot of time reading different articles and maybe having biased opinions that may not be true. And I think he really does a great job at what he's doing. Okay, and then for Motley Fool, I have a stock advisor package with them, which I signed. Basically, they help to publish articles around their own stock picks and then write the rationale for them, whether to sell or to buy. And then you can just refer to that for maybe some advice or suggestions. Maybe you should add that to your portfolio or not. Seeking Alpha is more like a notification, right? Because they actually keep sending you notification of the world news. Sometimes you don't have time to read through the world news or things that are happening around. Then they will keep sending you notifications of what is happening around the world. So that's just more of an information notification.
Actually, the reason I don't subscribe to this is because I felt that I could get free advice elsewhere. Do you see value, like more value compared to the free sources?
Let's go back to this equation of time versus money, right? If you can actually save time with some money involved, I believe it's actually quite a good resource. Same like all the courses you see on the internet, right? Why they charge so high is because they already have all the knowledge for you, concise in a few hours that you just need to take training for them. So consider it as your time saved, right? How much value is your time? So I felt that Meet Kelvin actually does a great job in summarizing all that stuff for me. So I felt that just paying it forward, he really provide value for free, and then I buy his course, and then he can provide even more insights on his insider group. I think that's just depend on how you value your time.
What's your cash deployment strategy?
So for my CPF OA, I actually do dollar cost average $1,000 every month. And then for my SRS, our dollar cost average $1,275 every month. And then the remaining actually left not much. So I will just keep those as my war chest in my cash position. And then when the market opportunity comes and the dip comes, and then I'll buy into my conviction stocks where I hope that they will recover from the dip and then bring me to the moon.
So it's basically a mix of dollar cost average plus lump sum if ever the market crash. That's one question I have about the SRS. I don't invest through SRS because the money can't be touched until old age. So why do you invest through SRS?
For SRS, it is ultimately a tax planning strategy. You want to reduce your taxes based on your current time because you feel that now is your highest income earning period, and then maybe in your old age your income is not that high, and because of time value of money, your $1,000 of tax now is actually worth more than your $1,000 of tax in future. So the same $1,000 in future, you're actually paying less taxes. So on the taxes note, if you're on the income tax bracket of 7 to 11.5%, this is absolute tax savings already. Okay, I'm not even talking about market returns yet. So if you invest in some S&P 500 index, right, that averages around 7%, that is 7% of tax savings plus 7% of market returns. 14% on something that is really quite low risk, I think that is worth a shot.
For the next question, do you use options strategy?
I actually began to use option strategy this year 2021 after watching Kelvin's option video. But of course, after watching his video, I had more questions, right? So I went to Chicken Genius. He actually published a few option videos as well, talking about his Tesla sell put strategy. But I still don't understand, until I watched this 3 hours long option mastery video by this guy called Project Finance. You all should go and watch it before you all start any options, because it really covers all the basic stuff. And for my option strategy, I just adopt a very simple sell put strategy right now. I tried selling calls, but it didn't work out well for me because that stock kept mooning. So yeah, I actually harvested a loss on that sell call option. So right now, I'm just adopting a sell put option for now. Next year, once I level up my option strategy and information and knowledge, right, then I may go and look at what are the other option strategies that I can adopt.
Just a side note, if your stocks are mooning, you can roll your options. Actually, that's what happened to me when Tesla mooned from 800 to 1002. It straight away hit past my strike. So I roll forward by 2 months and it came back down now. So I can close the position safely. Yeah, so that's how to avoid getting caught away. On your channel, I noticed you have a lot of robo-advisors, and it seems like you have a good grasp on your investing knowledge, right? So why do you still use robo-advisor to invest?
Okay, so fundamentally, robo-advisors is really suitable for beginners, and really robo-advisor is just a different investment vehicle. You are trying to outsource your investing portion to someone who think is investing better than you. But if you look at my videos and see how I do robo-investing, right, I don't leave it to them. I actually pick my own funds in my custom portfolio. So why do I still invest with them, right? One of the robo-advisors is actually one where you can invest with your CPF and your SRS. And like I mentioned in my previous question, right, all this is all part of the tax planning strategy. Okay, I don't like to pay too much taxes, so I always have a tax planning strategy. And how do I utilize the money in my CPF and my SRS? I go through a robo-advisor. And if you don't need to actually reduce your taxes, right, then I really see no point in investing through a robo-advisor, because there are actually much more options that you could do with cash.
So besides robo-advisors, right, you also invest in dividend stocks. How come?
Okay, so dividend stocks are more of my legacy portfolio. I started in 2014 with dividend stocks, right, because of passive income stuff. And in terms of US stocks, right, I actually only started in 2020 when the market actually crashed. And that's where I dipped my toes starting with US stocks. So my US stocks experience actually just 1 year plus. Very newbie information, and I may not have learned all this stuff. And for my knowledge, right, I only started watching finance videos like in 2020 as well. Before that, I was just watching entertainment channels, so I really don't have a good knowledge to share about US stocks, and especially in growth stock sense, right? So that's why I'm keeping these stocks first, but I consider them as my cash portion. Let's say if I really want to invest in a new growth stock or add into my conviction stocks and I don't have enough cash, right, then I will cash out my dividend stocks. Meanwhile, they will just sit there and continue earn dividends for me in the meantime.
How well do you think you did for 2021? And what's your investment plan for 2022?
Okay, so for those who are kepo, right, I actually underperformed the S&P 500 index this year, and because that's my second year of dipping into US markets. In my first year, 2020, I actually dabbled a lot in growth stocks, thinking that they can be multi-baggers, right, and they all went so well in 2020, right? Almost everyone is a genius in 2020. Come 2021, we started Fed 21 with a minor correction. And then May, we had another correction. In August, we had another dip. And in November, I'm sure you all know, if you are watching this in December, your stocks are probably in the red for growth stocks. So all these things, I'm really humbled by these mini market crashes in 2021. And I felt that maybe I don't really know myself in 2020. That's why I thought I can be confident in 2021. So coming year 2022, I always believe to actually work out a strategy, which I just mentioned earlier in my previous question. And that is why it's always important to have that mindset first. What do you really want in investing? And not going for all the shiny objects in the universe of investing, right? Because you will really lose your way, and maybe your conviction is not that strong, and you will feel really emotional when all the stocks go down. Especially one of my biggest losers are PayPal and Square in this period. They have gone down from their peaks of around $300 per share now to below $200. So that's quite drastic for me. No longer the genius that I think I used to be.
For me, I also had losses lah. But what I did was to sell options to reduce the cost basis. So I think my pain is not that bad. So that's how I deal with it emotionally lah. The next question is, do you have any advice for new investors?
Okay, so for new investors, right, you all may look at all these YouTube gurus, investing gurus, and even Instagram post their gains, right? I can tell you, most of them, they only post their gains, but they don't post their losses because nobody wants to show the bad side of them. And investing is really more about that mindset first. Let's talk about 4 things before you start investing, right? Having a sufficient insurance plan, minimizing your expenses, paying off your high debts, and also having a buffer of 6 months expenses before you start investing, because all these things, when the market crashes, at least you know that your foundation is correct, okay? Your foundation is stable and you don't have to sell off your stocks to actually go and have some cash to pay off these expenses, because all these things are actually protecting your downside and it's more of a defensive strategy. I think it's more important to protect your downside first, because once all these things are taken care of, then the upside will really take care of itself. Okay, and then you can actually take on more risk because you know that you have financial stability. So before you actually start investing, start building your foundation first. I think that's more important for beginners.
I think that's all for this interview. Thank you, Chris, for joining me in this interview. I think there will be more coming soon because your portfolio is super interesting.
Well, thank you for having me, Kelvin. I think it's a very great experience talking to you and also learning from others from this platform.
Yeah, so if you guys haven't subscribed to him, do subscribe because he will hit 10K soon.
Hopefully.
Yeah, okay, see you guys.